And welcome, folks, to the 27th episode of Continual, Sweatin Money. We may or may not have ownership or other positions in the stocks mentioned on this show. Don't buy stocks based solely off what you hear from this podcast, and always do homework and your own research before investing in stocks. I'm your host, Kong. And unfortunately, my guest, Geepson, could not be here today. He's catching up on some other things. So let's get straight to the news. The world's debt is something to worry about. Will this be what leads to the next financial crisis? In the 1990s, heavy debt bailouts led to the IMF bailouts of countries like Thailand. Heavy debt loads led to the IMF bailouts of countries like Thailand, South Korea, and a debt default by the Russian government. So will countries like China and Brazil be next? Let's not forget we're still dealing with Greece and other shaky EU nations. If not, what if, according to Citibank analysts, we may just be in for a recession? After all, China's performance is still lagging in there and is still an unknown factor. Plus, many other countries have now taken drastic measures like negative interest rates, so things are looking a bit glim. Fans of Starbucks, are you members as well? Well, you should think about joining maybe, but here's the thing. Until April this year, you gained points for every visit, no matter what the price. Starting in April, you'll gain points for the amount you spend. How does that sound? Airbnb, not a publicly traded company, but something to remind us of how government policies can affect the markets. In Japan, they may soon be illegal. Airbnb has been faced with major lobbying everywhere it sprouted up, and Japan is no different. That, and added with the increased number of foreigners coming into Japanese neighborhoods, people aren't exactly happy with Airbnb over there. Mars Incorporation, another privately owned company that makes popular chocolate bars like Snickers. Sorry about that. Snickers had enough complaints of their plastics in the Snickers bars, but couldn't guarantee that plastics can be found in any other of their other products, and thus decided to recall all of their products in Europe. Now, if you like Parmesan cheese and you don't mind shopping at Walmart, you might want to rethink where you source your Parmesan cheese from, because wood pulp has actually been found and recalled. India is discussing its terms of oil purchases with oil-producing nations and reviewing their contracts. Prices aren't negotiable, but concessions on loan terms and shipping costs might help. And if you're thinking of starting your own hedge fund, you should consider SumZero, a website that links potential investors to big money investors. Now, for many cereal makers like General Mills, Kellogg's, and Pepsi, if this Washington Post article on millennials not eating cereal is true, we may be in for some trouble. Well, at least those companies specifically. So it's not just Iran coming on board that will keep oil prices low, but also, as Gibson has mentioned in the past, with alternative fuel sources, natural gas via fracking and other methods, people will be relying less and less on oil as an energy source. So will oil go down again? We have yet to see. Now, at the end of January, we were wondering what would happen to Vietnam's recent pro-U.S. policy. Would it change with the leadership change? Well, we're talking about Vietnam because the head of the World Bank, Jack Kim, came out with a report laying out the roadmap plans for Vietnam's next 20 years, which they jointly came up with, assuming that there will be an economic growth on an average of about 7% each year. Will this be the only shining light on international IMFs? If so, Market Vectors Vietnam, VNM, is the only exchange-traded fund that offers an exclusive collection of Vietnamese enterprises, state-owned and private. Keep in mind, however, they are down to $14.06 from a high in 2009 of $31.14. Also, despite Vietnam's growth rate this year being at around 7%, this ETF's value has actually fallen. So, something to consider. The G20 met and talked about what to do with their economies, and they didn't exactly say anything new. Everyone's got their own thing going on. Europe's central banks and Japan's central banks will continue with their stimulus measures, while the UK will wait and hold until the economic ups and downs kind of subside before they actually decide what to do. Some are even saying that there may be some political turmoil if Trump actually becomes the Republican candidate for the U.S. presidency. And so let's take a look at the week in review. As we can see, Wednesday we saw a giant drop in opening prices compared to the day prior, and it's clawed its way back up. So we have yet to see what tomorrow's performance will bring. But if the international markets are anything to look at, we may get a sneak peek. Japan's Nikkei was the first major Asian stock exchange to open and was doing pretty good until about 9:30 a.m. local. It started to go for a dive, but it's still above from last week's levels as of recording this podcast. Now, Korea's Kospi took a steep dive upon opening before fiercely climbing back up and is still trying to climb its way upwards. After falling roughly 6% last week, the Shanghai Composite Index is down another 3.57% so far. Taiwan, for all its closeness to China's economy under the Ma Ying-jeou administration, is bucking the stock market trend today. While China's falling, Taiwan is actually up so far by 0.054%. Hong Kong, however, is not spared, most likely because of the number of Chinese businesses that are listed on the Hong Kong Stock Exchange. Hong Kong's Hang Seng Index is down 1.04%. And finally, we get to feature our new section. This episode, we're consolidating the portfolio review and the investing strategies into the playbook. Now, just a reminder again. Now, just a reminder, none of the following should be misconstrued as financial or investment advice. This is merely provided for documentation only. So, iShares MSCI Japan ETF traded under EWJ. I put down an option with a strike price of $9, which expires on March 4th. Sadly, it doesn't look like Japan's economy is falling so quickly, or not as quickly as I'd like. So let's hope I don't get assigned this, which means I'll have to pay $100. I'll have to pay for 100 shares of this. It kind of sucks. So I might want to roll this position, considering the news on Japan. Yelp. I thought this was going to go down the toilet when I bought it at the beginning of February, and the put option I have on this expires in March 18th. But right now it's at about $19, so I'll lose the fees that I bought into the option for. It doesn't look like it's going to go down all the way down to $9, or yeah. Anyways, then on a whim, I bought some Merck on some good news of their products, but that hasn't panned out either. Right now it's down from the strike price of about $1.45, but it doesn't expire until March 24th. If it rises back up to the strike price and beyond by then, that'd be great. I'm really hoping that happens. Now, Spider Gold. I had some positions, some puts and some calls on this one. And I sold some of the calls at a loss, unfortunately. But yeah, looking at the way things are with Japan and China so far, that was a big mistake. But right now I have some calls, and for now I have some unrealized gains, but we're going to see what happens come tomorrow. A lot of choppy water still. But what I'm hoping for is that it should continue to rise, and that when the federal rate hikes do happen, I'm pretty sure it's going to happen, gold is going to fall down even further. So hopefully rumors of the recessions will stop, but we'll see. Koenig & Phillips, traded under PHG. I actually owned, emphasis on the past tense here, owned some stocks in these guys, but when I bought them, it was close to their highs at around $34. Now, I was hoping that the soon-to-be stock split when I bought them was going to happen. Maybe I'd have stock in two companies. That didn't pan out either. In fact, the stock just dropped, which is when I sold it at a loss in this past December. Now, the price is actually lower even from the levels that I sold it at. So I'm buying call options, hoping it'll actually rise back up. This company doesn't give you many options, though, so it doesn't expire until October, which is pretty good. Gives me a while before I have to think about it. And I hope it means it'll go back up high enough to win back what I lost. Well, what I lost in that company. As far as my other losses goes for these past 2 weeks, that's another issue. So let's take a look at recommendations. Now, for those of you who are tired of looking at individual stocks but think they have a general grasp of certain sectors of the economy, you might want to look at trading ETFs. If that's the case, ETFDB's screener page is a really good tool you're going to want to look at. And just a reminder, we may or may not have ownership over the positions of the stocks mentioned on the show. Don't buy stocks based solely off the TA from this podcast. And always do your homework and research before investing in stocks. All right, thanks for listening.